Disney has the best brands when it comes to entertainment in the entire world. You'd think that would equate to an amazing stock to own for the long term, but over the last 5 years, Disney has barely produced a return for investors, and over the last 10 years, the stock is only up 20%. A lot of casual and retail investors invested into Disney, not only because of the iconic and recognizable brands, but also the fact that it was an amazing business prior to 2020. It seems like in the 2010s, Disney would have a blockbuster film come out every year, but ever since the pandemic hit, it just seems that none of the Disney movies that they're putting out has done well in the box office or created any social media buzz. And this isn't to the fact that people aren't going to theaters either. Look at the Mario, Barbie, and even Oppenheimer movies. A lot of people believe that Disney is going woke and that they are sacrificing quality in their films to basically appeal to more audiences and become a more diverse corporation. And I actually agree to this to an extent. You could even say that they're doing this.
New Prince Eric movie.
Put a chick in it, make her gay. Fuck Indiana Jones, put a chick in it and make her name it gay.
But Mrs. Kennedy, Bambi's a baby deer.
Fuck baby deer, put a chick in it, make her gay.
Excuse me, I believe I asked you to put a chick in this and make her gay.
It means put a chick in the linguine and make her fucking gay.
Hello, I like money.
Alright, so Disney owns a whole bunch of stuff, right? They obviously own the Disney company itself, the brands associated with that, all the classic movies and films and all those brands. They also have the Disneyland Resorts, the Disneyland Cruise Lines, ESPN, ABC. Some would say that they even have a monopoly over the entertainment industry. Pixar, Miramax, Walt Disney Animation Studios, kind of what I mentioned earlier, and all sorts of stuff. One would think that it would be impossible for them to fail, but somehow the worst case scenario has happened at Disney. Right now, one share of Disney costs $112.30 per share. That is up 13.28% today, and that's gone up ever since they announced that, one, they'd be hiking their dividend 15%, they'd be buying back $3 billion worth of shares, and reporting an amazing quarter, and that things look like they're going to be back to pre-pandemic levels very soon. This is very good news. 2024, as I mentioned on this channel before, was a huge year for Disney. This is really a make-or-break year for them, and so far, they've absolutely clutched up for shareholders who have stuck through. But are they completely out of the headwinds? We're going to look at that in today's video. Disney right now is currently trading at a dividend yield of 1.6%. Now, to be transparent, I do own Disney in my portfolio. It was one of my bigger holdings when I first started the position, but really I've just been holding through this kind of tough time, and I'm still down 20% on my position. I bought 2 shares at 100, 2 more shares at 170 and 180, and 1 share at 140. So hopefully one day I'll be back in the green. I am kind of in a questioning state of what to do with this holding. I'm still kind of debating whether it means the requirement of the stocks that I look for today in my portfolio. Disney was one of the first stocks that I ever owned. Disney's CEO is Bob Iger, who is one of the best CEOs of all time in my opinion. He's come back to dig Disney out of the hole that he potentially kind of dug himself into. For Disney, the transition to streaming has really been difficult for them. They haven't really been profitable over the last couple of years, but it appears that Disney may be a cash cow again. Now, the most important financial metric to look at in a company is the free cash flow, which I've talked about. That's basically going to be what your dividends and buybacks and your returns come out of at the end of the day. But revenue is a good place to look just to see how the actual business is doing, if they're actually selling stuff, there's demand, etc. And we can see that Disney's revenue has been strong even during this tough time. Their 3-year growth rate on the revenue is 10.38%. They have a 5-year growth rate of 4.17% and a 10-year growth rate of 6.82%. Consistent and very good looking revenue growth. Even during 2020, they held up pretty well. But revenue does not mean anything at the end of the day if that does not equate to free cash flow, and we're going to take a look at that. And we can see up until 2020, unfortunately, it does not equate. Now look, 2020 was an insane year, and it really impacted a company like Disney, and they lost a whole lot of money. Combine that with their pre-planned transition to streaming, and it absolutely killed them. But it appears that Disney may be recovering to pre-pandemic levels very soon. Disney's recent quarter in free cash flow is absolutely insane, having them completely jump up 357% to where their previous levels were in 2022. Hopefully the big thing here is consistency and jumping back that free cash flow to pre-pandemic levels. If they can do that, I think the stock will once again trade at a premium for the brand. Another thing that's very important in businesses and stocks is margins. And with margins, what I ideally like to see with my core holdings is consistency. You don't want to see one quarter with crazy margins, one quarter with really bad. Now, I think there is an exception here with Disney. 2020 was an insane year. Nobody predicted that, and that obviously had a crazy impact on their margins. And we could see that pretty much on the left side of the screen here. But if we could see the margins by year, it is a little more consistent from 2005 to 2020, and hopefully they can build that back up and consistently increase those margins like they have been. So with margins, it isn't a great thing to see right now when it comes to the quarterly, but long term, hopefully they can continue to trend up. And also the fact that streaming was profitable this year will be a positive thing, and you're going to see that impacted in their margins for the next couple of years. So it looks bad right now, but obviously you need to look at things in a longer time horizon and also take context into account. Another thing that could be a big risk for investors when looking at a business is debt. And right now, Disney holds a lot of debt. That's $41 billion in debt. Now, a lot of that is really to fuel their streaming service. We could see pretty much ever since they made that transition, they had to invest a whole lot of money into it. But I think that will go down over time, and they also just did make a huge investment into Epic Games for a stake of that. So hopefully these are investments that they're making into their business that long term will pay off for us investors and Disney as a company. Stock-based compensation is another thing that eats away at returns from investors and cash flows from a company. And we can see with stock-based compensation here, it is pretty noticeable here. It's not horrible, but also it's not good as well. I will say this, even during their glory days, they did carry about a decent amount of stock-based compensation, so keep that into account. But once again, if you compare this to any other of my core holdings and other analysis of stocks that I've done on this channel, it doesn't really look like this, to be honest. So that is a bit of a red flag. Recently, Disney's dividend was suspended, but they unsuspended it, and I actually got my first ever Disney dividend this month. Now, Disney actually just recently announced that they would increase their dividend 50% from their current dividend. Now, that's still not back to pre-pandemic levels, but definitely a positive thing to see. Shows the investor that they're profitable once again, and they're raking in cash flows, and they're doing it at a pretty fast pace. In dividend data, it hasn't been accounted for yet since they literally just announced it yesterday, but definitely a very positive thing to see from Disney, and it indicates to me that they are once again raking in dough. Something unique about Disney, unlike my other holdings, is that they pay out semi-annually, which is basically twice a year opposed to 4 times a year. Just something interesting to know. I will say this about dividend cuts. Dividend cuts are never a good thing. But with Disney, I think they did the very responsible thing of cutting and suspending the dividend. That's something a lot of businesses didn't do, and now they're suffering because of it, and I think Disney did the responsible thing here. But we can see historically, looking back, Disney's payout ratio, which is the best indicator looking at dividend sustainability, based off their free cash flow, is historically very sustainable. It's around 25%, and they've maintained that during their glory years. We can see, obviously, that took a huge spike during 2020, and now I'd assume that it's going to be ranging around that 20 to 25% range once again. So very solid things to see here. Their payout ratio based off of EPS also ranges around that 25 to 30% range. Now, I don't love to look at the net income EPS payout ratio simply due to accounting reasons, so I pay attention more to the free cash flow, as that's more indicative of how their business is doing. Over time, share buybacks are another amazing way that companies can reward shareholders. We can see that Disney, unfortunately, has not been buying back a whole lot of shares ever since 2020. But just yesterday, Bob Iger announced they'd be repurchasing $3 billion worth of shares at these low prices. I think that's a very good thing, and that's very positive if you are a Disney shareholder and holding through these tougher times. Share buybacks essentially give you more of a stake in the company with your current stock that you own. You have more equity at the end of the day. And we can see that historically, again, prior to 2020, Disney did historically do buybacks. Return on capital employed is a great metric to look at how efficiently Disney uses their money to make more money and a return on investment and grow the business. And we'd see that Disney historically, once again, prior to 2020, it's a common theme here, had a very solid return on capital employed, but that's pretty much plummeted since. Once again here, if Disney continues raking in cash from the streaming services, I think this will continue to go up as well. Alright, time for my thoughts on Disney. I think it is a very positive thing to say that they're re-racking in cash, but I also think there are a lot of risks with this company. One thing I will say too is that I don't feel 100% confident that they fully recovered that pre-pandemic brand that they once had, that aura that Disney had. I remember when all those Marvel and Star Wars movies were coming out in the 2010s, it was such a buzz. Disney was the premier company when it came to entertainment. I just don't see any of those blockbuster films coming out now. You honestly tell me, when's the last time that you were really fired up and you went on Twitter and saw an amazing movie trending from Disney? For me as a shareholder, that was a huge part of owning Disney. And I don't care what political side you're on, it is so clear that they are trying to really appeal to more audiences and maybe sacrifice a lot of quality in their films, and at some point it gets obnoxious to some audiences. So I am personally concerned a little bit about Disney's brand at the moment. It's not the Disney that I bought. The Disney that produced blockbuster films, stay out of politics, etc. Like fucking Lizzo and Star Wars, come on! And there are so many films that can naturally integrate diversity and not make it feel forced. A few positive things to highlight though that Disney has recently done, they have kind of moved away from the quote-unquote woke content. They actually have Childish Gambino star in the new Lando film, which I actually think is going to be pretty good. I'm very happy that they bought the Pat McAfee show, and Bob Iger has kind of admitted that they have gone quote-unquote woke a little bit, and they're going to move away and learn from those mistakes. So that's the best you can hope for in that situation. And hopefully Disney can get back to producing blockbuster films and really get back to that pre-pandemic Disney aura. If they can do that, I'd be a lot more convinced as a shareholder, but there are still question marks for me at the moment. Alright, thank you for making it to the video. Greatly appreciate it. Make sure to hit that like button, smash the subscribe button, check out the Do Dividend Stocks.drugs merchandise, check out the channel memberships. You found early access to all my videos. Actually pretty solid perks on there. I've been working a lot on the channel memberships. Thank you all, Do Dividend Stocks.drugs, and
Put a chicken in, make her gay!